Welcome, everyone. Another episode of Financial 15. Kevin and I are ready to go. Lots of fun today. We're going to try to provide some financial knowledge, improve your situation, do all that in 15 minutes or less. And today we're talking about ESG. What does it stand for? What is it? How do you incorporate it into your investments? We're going to tackle all those questions.
Yeah, definitely one of the most prevalent issues that we're having right now in the investment world is the ESG scenario. So remember, if you want to know more about this, please go and visit our YouTube channels anytime you get a chance. Excuse me, like us on Facebook, or if you want, you can go to our beckerorr.com website where we have this and many other videos we can look at. So Clint, without any further ado, what is ESG? Define it for us and let us know what's going on.
Absolutely. ESG, an acronym, like lots in the finance world, there's acronyms, abbreviations. This certainly fits that category. ESG, and this is the definition from the Responsible Investment Association, the incorporation of environmental, societal, and governance factors into the selection and management of investments. So you can see the E, the S, and the G there, environmental, societal, and governance, and working that into your investment portfolio. Now, the term ESG is relatively new, but that whole concept of investing to the benefit of society is not new. We've seen that for decades. There's a long history of that. And Kevin, I think Canada has quite the history when it comes to that socially responsible investing style.
Yeah, we really do. I mean, we're one of the leaders in this. And again, it goes back to, as you mentioned, back if we go to the early 70s, possibly the late 60s as well, if we want to do it. It wasn't known as ESG back then, though. It was more of an SRI, as we like to use those acronyms here in the investment industry. Socially responsible investing at that point in time. It's more or less progressed over that time frame. But again, if we go back, we trace our roots back to the 70s. And again, a lot of this dealt with Canada's view on South Africa during the apartheid times. This was not something that we believed in. This was not something we wanted. So what do? Economic backstops. All of a sudden, you start seeing things along the lines of the Canadian banks are stopping to lend to any South African organization. As well, Canada's pension and endowment funds at that time, any investments they had dealing with South Africa were all pulled off. That led to a huge progress going forward. Not only that, but it also started to see that the rest of the international world did that. So we started to see that you would start getting economic sanctions put against some place that wasn't following socially responsible investing sort of options. That's sort of a brief, quick view on what the history was. Anything else you want to add on that, Clint?
Yeah, I mean, that's a big example with apartheid, but that's the Canadian history. It's a great example of how Canada's been involved in socially responsible investing in the past. Now, if you evolve to the ESG, it's no longer just the big organizations. They're certainly part of it, but it's down to the everyday investor being able to change their portfolio as well to reflect those kind of values. So we're going to go through a few details here. We'll bring up the definition again: environmental, societal, governance. That's the E, the S, and the G under the current acronym. For the first bit there, the environmental, I think this is the one most folks would come to mind. It's the easier one to understand. So that's things like pollution, climate change, renewable energy. Also part of that E might be sustainable agriculture. It might be getting water security. It might be waste management. That's all part and parcel of the E in the ESG. And if we move to the second factor there, Kevin, you have the societal issues.
Yeah, the societal issues deal with how society is going to deal with. How do the corporations deal with the society that they're in? Again, are they running sweatshops and using child labor to be able to produce their goods? Are they trying to reduce poverty in the areas that they're in? Or are they only worried about certain people and working it? You want to make sure that you're hiring across different lines. Again, that can go as same sort of scenario. Affordable housing. You want to make sure that your employees have something that they can live in and that they're not sitting there working for pennies on the dollar and going from there. But those are only a few of the options that we can take a look at. You also deal with things along the lines of weaponry and stuff along that. What else are we missing off that S point?
Yeah, in addition, you hit one right there, weapons manufacturing, also tobacco, gambling. The idea here with the S in the ESG is the company's impact on society. So the E is the company's impact on the environment, then you have company's impact on society, and then the G is the governance. That's within the company. So that's factors like executive compensation, which I know you rewind a couple of years, you had the Occupy Wall Street movement. That was part and parcel of the executive compensation factor. You might have women in leadership roles as part of that G. Cybersecurity, you could also throw Indigenous relations under that banner. So you have lots of factors that make up the ESG. So it is a very broad umbrella nowadays. It includes lots of potential values. And I think it leads to a relevant question here, Kevin, is how do folks incorporate that into their portfolio? How do you make an investment portfolio that includes those factors?
Yeah, you have to basically select the companies that are doing what the ESG is that we want to take a look at. So as simplistic a view as it is, really there's only 2 points. You're either for this or you're against this. Now, there's a broad range of factors that go on, and we'll discuss that in a bit. But I mean, the positive screening process will basically come to, what is the company dealing with? Is the company that I want to invest in, are they looking after the environment in any way? Are they looking to help their society that they're investing in? Is the governance there? Are they making sure that their executives are compensated fairly, but not overly? If they're not dealing with any of these factors, then yeah, you move to the negative side of the screen. It's not a company I want to invest in. Mm-hmm. As simplistic as that sounds, that's the basic investment screening process right now. But again, this is just a small sample of it. There's more to it than just positive and negative, isn't there?
Oh, there definitely is. This would be kind of step one, or in my opinion, step two. Step one would be, determining the factors that are important to you. We give you a long list there. That might not be applicable for everyone. Maybe there'd be 2 or 3 on that list that are higher in priority. So that'd be step one. And then step two is creating an investable universe. And all right, what companies meet those factors? Which ones don't? I now have a set of companies I know I can invest in. And then you go on to the additional criteria to find out which ones should be in the portfolio. But that is the process, the screening, the positive, the negative screens. And there's lots of people doing this at one level or another. We've seen an explosion in ESG investing over the years. This comes from the 2020 Canadian RI Trends Report. It came out last year, and it looked at data up to the end of 2019. You can see by the end of 2019, $3.2 trillion. And this is just the Canadian numbers. This doesn't include what's going on in the US or the rest of the world. That's just the Canadian responsible investment assets, $3.2 trillion. That's up 48% from the end of 2017. And up a huge amount from where it was just 5-10 years prior. So a significant amount of money being thrown in this area. And it's not for all the factors. That 3.2 trillion just means some of the money would be invested according to the guise of at least one of the ESG factors. Doesn't mean they have to hit all the criteria, but one of the criteria is met, and you have a big chunk of change there, Kevin. So significant dollar figures.
Yeah, that's what we're dealing with. And again, when you get a popular entity like this, people want to get into it. So, I mean, by the time we hit that sort of 2026 year, 20 years in, we're definitely going to be probably close to 10 times what it was back in 2006. And again, it's like any other area. Tech becomes hot, investors want to go there. ESG has become the biggest thing moving forward. All investment firms, all mutual funds, the ETFs and everything else, they want to get a piece of this because this is where the dollars are. This is what's important to people moving forward. So again, the ESG explosion is something that has to be taken seriously because of what's going forward and what they're doing at the moment.
Yeah, and just to add some context, that 3.2 trillion, again, that's the Canadian investable assets that are done by at least one factor in the ESG formula there. It also represents about 60% of the total investable funds in Canada and total assets under management. So it is a very large percentage. And like anything in the financial world, lots of money going one direction. Leave it to Wall Street to find products to sell those folks. They're all clamoring for something ESG related. They will find ESG related products. So you've seen a whole slew, a big wave of ETFs and mutual funds and anything related to environmental, societal, governance factors. They're not all created equal. There's lots of subjectivity here. I mean, think of some of the terms we mentioned earlier. They're not concrete definitions. There's some subjectivity there. And some of the companies have been a little more liberal with their definitions than others. So not all products are created equal. It can lead to maybe some marketing misrepresentation. I think some folks would be surprised if they bought a product and they looked at what's actually inside of it. There might be a mismatch in terms of the impression they got from the title and what's actually inside. There's a lot of that that's currently happening because of the ESG explosion, because there's so much money in that area.
Yeah, you're right. And I mean, that's something that we definitely have to tackle and figure out what's going on. But if we notice, why is the ESG becoming more and more popular? It's the way societal norms start to move forward. 30 years ago, it wasn't as big a thing. Why? Because the baby boomers were the ones investing, and it was all about what the companies are doing. Now, a lot of the bulk of the money that's coming in is coming from millennials. The millennials that are in, these are important issues to them. If you want to attract the dollars that the millennials are going to give you, you have to base it on what are their environmental goals, what are their societal goals, what are the governance they want from their corporations. So these are all important factors that we want to look at going forward. Any other points you want to add on it?
We covered a lot in this video as more of an introduction of what is ESG, trying to give you a broad-based view of the ESG world. You can see on the bottom there, not all ESG products are created equal. We're going to dive into that in the next video, give you a good idea of exactly what's going on and some tips and tricks on how to avoid getting into some of those products that might not be the best fit for you. Of course, if you have any other questions, where do you want folks to get a hold of you, Kevin?
I wanted you to consult us through chatwithclintonandkevin.com. That's the big one to do. Look at it. It's on the bottom of the screen. You can always visit our website as well. That point is right there, easily to get there. So as Clinton said, we've got more stuff coming down the road, probably more acronyms and more terms you haven't heard, but we will try and define everything best we can. I think that covers everything on my end.
That sounds good. Everyone take care and stay safe.